I'm still very bullish on multifamily. I think when we all look back a year from now and we look at the different sectors and we look at multifamily, we're going to see that it fared definitely on the top of everything else.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. And welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today, I'm excited to have Jorge Abreu. George, how are you doing today?
I'm doing good, man. How you doing?
Doing well. Thanks for joining me. Definitely appreciate it. So a little bit about George. He's been investing in real estate full-time for over 14 years. He started in single family and small multifamily properties, similar to me. So that's kind of cool. He's wholesaled over 200 properties, fixed and flipped over 100 properties, and developed several new construction projects, over $8 million in ground up. And for the past 3 years, he's been solely focused on large multifamily properties. George is currently an active and passive full-time multifamily real estate investor and has over 1,700 doors on the GP side and over 1,400 doors on the LP side, and has a bunch more under contract. I'm going to let you take it from there, George, because there's more story to tell. Why don't you give our listeners a little bit more detail about your background and cover anything that I maybe missed?
Yeah, no problem. So, like you said, I started in single family, graduated from the university with an engineering degree, went to work for actually UPS in their engineering department. Wasn't thrilled about being an engineer. Probably realized that during my senior year in the university. So I started looking at other successful individuals and what they had done and how they had built their wealth. And I kept seeing everything pointing towards real estate, or at least a good majority of it. So that's when I started looking into real estate. I got my realtor's license because I thought I needed that. And then I got my mortgage broker's license, did a little bit of that, and then realized that I really didn't need any of that to do investing. So I got some coaching and started doing some deals. After a couple deals, quit my job and started doing real estate full time. That was over 13 years ago. Then about 3 or 4 years ago, I woke up and I looked back and I was like, okay, what have I done for the past 10 years? What have I built? I did start a construction company in the whole, when I started doing the single family and wanted to scale that, I realized that having a construction company could help. We got burned quite a bit of times by GCs. So, I did have that company that I had built. I did have the single family, but it was very transactional. We had a couple holds, some smaller multifamilies as well, but for the most part, it was a lot of fix and flips and a lot of wholesaling. So very transactional. Didn't quite have that wealth built in and that passive cash flow coming in. So that's when I started looking more into multifamily. And once I realized that you can syndicate and purchase these massive properties, and the benefits of doing that, I mean, the tax benefits, et cetera, I went all in. I stopped doing single family altogether. I tried doing both for a little bit, and I realized, let me put my focus here. Let me conquer this. And that's what I've been doing for the past 3.5 years. Same with my construction company. I stopped doing single family altogether and just focused on multifamily and commercial there as well.
Nice. So your construction company is still going? Right?
Yes.
Now? Okay. And is the construction company mainly for your own purposes to renovate the current properties that you've got or you're buying, or are you doing other work outside of that too? Or is it third-party work?
We do third-party work. Mainly, it was built for our internal projects. We like having that control, just like some sponsors like having the property management in-house. We like having the construction in-house as well.
Sure.
But yeah, we do third party for other investors, and that way we can keep our crews busy at all times. That's very important on the construction. You don't want to lose a crew because you don't have the work to give them. So
Yeah, definitely. I agree. I mean, that's what was a big part of why I did the same thing. It allows you to keep that control, allows expenses to stay way down by having your own construction company. So where's the, like, obviously we're in this COVID time, and
yes.
there's so much confusion going on out there. I don't want to get too deep in the weeds on the whole thing, because quite frankly, we don't know what's going to happen. But I just want to know a little bit about kind of how your company is positioning itself, and kind of what you're looking forward to in the future.
Yeah, so currently, like you said, there's a lot of unknowns. So we've definitely implemented a lot of things on the asset management side, and we're trying to reserve as much cash as we can just in case. And then we've implemented a whole lot of systems and procedures as far as still being able to get things done through this time, especially when it comes to collections and to our residents. Continuing to lease out units, which we've done a good job of, and trying to pretty much offer everything we can online. Less contact, the better, but still keeping our offices open and still having that presence on site.
Yep.
I think is pretty important. And then just doing it all safe. Even the construction part of it, we've had to implement a lot of procedures to keep our clients safe, to keep our crews safe, our employees. So I mean, it's been a lot of adjusting for sure. And then as far as what I think, in my opinion, as far as multifamily and moving forward, I'm still very bullish on multifamily. I think when we all look back a year from now and we look at the different sectors and we look at multifamily, we're going to see that it fared definitely on the top of everything else. And I think there's going to be opportunities coming. We're seeing some already, and I don't think it's going to be a massive window of opportunities, just because before this all started, the economy was in a great place. Everybody knows that.
Yeah.
We kept talking. Seems like year after year, we kept saying, okay, this is going to be the year. This is going to be the year.
Yeah.
And, it just kept on strong and stronger. So I think we can get back there. There's going to be some lasting effects for sure. I mean, I know that. I think everybody can see that. How bad it's going to be, I don't know. I don't think anybody knows that. It's going to depend a lot about right now when we start opening everything back up. How does that go?
Yeah.
And we'll see.
Yeah. I mean, the story's yet to be written, right?
Right.
Hey, I want to interrupt real quick and talk to you about the North Star Real Estate Conference virtual event. Look, this is going to be an experience. So if you've wanted to take your investing to the next level, if you wanted to start investing, we're talking about cash flowing real estate at this conference. And it's more than a conference. Like I said, it's an experience. So it's not your run of the mill webinar where you go, well, I could just listen to YouTube videos, podcasts, so on. No, we're going to actually have interactive networking. You're going to be able to network. You're going to be able to speak with the speakers. You're going to be able to network, speak with the sponsors. You're going to be able to network and speak with each other. And the idea is, look, the live events, the best thing, the best part is the networking. We want to bring that to the virtual experience, and that's what we're doing. So my team has been putting a ton of time in to getting that together so you can have the best experience possible. And it's not just webinars. It's not just a bunch of information being thrown at you. No, this is an experience. So we've got some amazing speakers. We've got Trevor McGregor, We've got Brandon Turner and Michael Blanc. We've got Anna Myers. We've got myself. We've got amazing speakers. And that's just like the tip of the iceberg. We got so many more. We want you to attend this event. Look, if you want success now, this is an event you have to attend. It's going to be October 23rd and 24th, virtual event. And you can go onto our website, the NREconference.com, and get your tickets. Go ahead and use the promo code DEX, DEX, and that'll give you a discount. Get your tickets for $97. Or if you want to do the VIP, and the VIP is an amazing experience as well, that'll give you a discount as well on those tickets. So sign up now. Don't wait. Anybody who waits just ends up not taking action. People that are action takers, people that are successful, they actually get it done. And that's you. Talk a little bit more in depth about the asset management, because that's a really important factor. I think a lot of podcasts, myself probably included, don't cover asset management and systems as much as we probably should, right? So talk about maybe some of the things you're doing and implementing to try to continue to collect rents, continue to lease. You've already kind of mentioned some stuff, but let's go a little bit more in depth in that.
Yeah, so I mean, we've at all our properties, we've made sure that we can that online you can tour a unit. We're getting starting to tour the property, doing videos of the actual walking through the property, seeing the amenities. Yeah,
you guys done drone footage yet?
We do have some drone footage. That it's not specific. It's things that we had done before, but not specific to now.
Sure.
So we could probably do better there. And
we
then
we don't have that either. But as you said it, I thought, well, that would be really cool to do.
Yeah.
A drone footage where you zoom into the property, you can see the city from out, zoom in, fly over. You can see the parks and like all the stuff that's around. Cause I've got some really cool properties that are right near parks and rivers and stuff like that, and you can see the whole thing. I think that'd be a really cool feature to where people are.
Yeah, no, man, I think it's important. I mean, to have somebody feel comfortable and wanting to live somewhere before they step foot there. And then as far as the whole process of leasing out the unit, the application, everything, making sure that can all be done online. Same with collecting rents. We've seen a huge spike of online payments.
Yeah.
And then communicating with your residents nonstop. And then also with
communicate with them, because obviously like a knocking on the door to talk with them is a little different, right? We're not.
Yeah. I mean, we're doing some of that too, but
not as much, probably.
Not as much, right? Yeah. It varies from property to property.
Sure.
Ideally, we would like to have one system through all the properties, but we have different property managers in some of them, so it just varies. I mean, but anywhere from text messages to if we've got an app built in, emails obviously is a big one, and then communicating with the team. So we've gone from all the way down to daily calls on some of the properties, definitely weekly, and just tracking everything, making sure we're on top of it and we're taking care of our investors' investments and that we come through.
Yeah, I think one thing I've done differently is I've been asking for a lot more data for my property management company, where before we were getting plenty of data, but I'm asking for more. Like, I want it consistent. I don't want just a couple times here and there. I want it very consistent to see what's going on, get updates when we're getting move outs, who's not paying rent, and that type of stuff. So I think that's really important. Talk quick about, you mentioned your investors, like any changes on how you're communicating with them, any things that you've done differently with your investors?
Yeah, I mean, we've started sending weekly updates
Weekly, okay.
Yeah, when it used to be, I mean, we started with quarterly and then we started going to monthly updates before COVID, but now we've taken it down to weekly. We want to let them know exactly what's going on every week and just let them feel comfortable pretty much.
I think that's really important. Probably something I was been thinking about as well. And I haven't done weekly yet. I sent out like a middle of the month type of update. So basically twice a month. But I think weekly is smart. I've actually heard of one company doing daily. I think that's maybe excessive, but communication, I think, is the main thing. Is we want to
Hmm.
communicate to our residents, we want to communicate to our property managers, we want to communicate to our investors, so everybody knows what's going on, because it's a scary time. People are
Yeah.
super unsure of like what's happening, and you hear things in the media, right? And I was just talking with one of my investors the other day, and I was telling about the performance of our properties, because May has been a really good month so far, and they said, oh, that's really cool, because it like 30% of tenants out there just aren't paying rent. And I said, well, where did you hear that? Oh, I read an article on it. I said, oh, okay. I think I know the article you're talking about. They put out some statistic, and it said like 30% of the people hadn't paid rent yet in April. And that was like, by April 2nd or something like that, where
Right, right. That's
in a,
nowhere near what the average actually is.
well, yeah, in like a traditional sense, like, 25% haven't paid rent by then. So yeah, a couple people are not paying yet, but so you like, my point is, I guess people like see things, hear things, and they go, oh my gosh, what's going on? And if they're not getting communication with you, they might be a little freaked out and panicking, where you can just settle them down a little bit. You can show them reality. And that's
Hmm.
really important. Um, so you've done a lot of scaling fairly quickly. I mean, you changed your model. You transitioned from these single families, small multifamilies, fix and flip, wholesale, and you transitioned to this multifamily model. Take me through kind of what some of your success habits were, and maybe just some, you know, just some of the skills or success, stories that you can provide anybody who's listening, because there are a lot of people that are listening that go, I want to do the same thing, like, and it might not be they're doing single family, they might be doing something totally, but they want to see that growth happening, they're ready for it. Take us through a little bit of that.
Yeah. So, a couple of things I can think of is from day one when I decided this was the path I was going to take. I decided I wanted to build it with a team. I didn't
Mm.
want it just to be myself. I wanted to scale. I wanted a team. So I started with systems from the beginning. Um, I've done it the other way where I was pretty much doing everything, and there's only so much one person can do.
Yep.
So
Yep.
that's one thing that helped me scale. And then I'm also willing to partner with others, and as far as having like co-GPs to
Yep.
to be able to scale as well. And I've been lucky in that sense where I've done a ton of networking. I've met a lot of different co-GPs, and then when I see that, okay, well, that co-GP is really good at doing that, we're really good at doing this, let's put that together and let's see how many properties we can take down as a team.
Yep.
Um, and that's kind of what's allowed me to scale quickly.
Yeah, yeah. I think that's so huge. A lot of people think they're going to do it themselves, and because they've been able to do it themselves in single family homes, or something like that. But when you get to wanting to scale big, go from a couple properties, or flipping basically, to go to 1,700 units, it takes more than just you, right?
Yeah,
Your
yeah,
success would have been very limited if you were trying to do it just yourself.
for
So
sure.
that's definitely huge. Um, what's a like a daily habit, daily routine that has been able to get you there as well?
um I actually just started doing this with my team since COVID, and I thought it's worked pretty well. Is we email each other every morning with our top priorities.
Mm.
So we have an email thread going, and everybody lists their top priorities for that day. And then at
Yeah.
the end of the day, we report back and we say what top priorities we've completed, and we give ourselves kind of a score for that day of what we accomplished.
Really like that.
Yeah, it's a really simple, quick, but the team has adapted to it quickly and it's worked well.
A little bit of accountability
Yes.
and mindset focus, right? You got to focus on what you're going to actually accomplish that day, and then you got accountability at the end of the day. Did
Yep.
I actually do this or not, or did I, watch Netflix all day?
Right.
So,
Right. And some collaboration as well, because
yeah,
sometimes a
yeah.
teammate will see, oh, look, they're trying to get that done, and they can't get
Oh
that
yeah,
done
true,
unless I get something done.
true, definitely. Um, what's a mistake that you've made, and how have you actually learned from it?
Mistake I've made. Um,
You haven't made any, have you?
no, not one, man. It's too many. No. Oh gosh. I trying to think of a different answer because I've said this one before in some other podcasts, but um, kind of leaning towards it is just not starting to do multifamily earlier,
Yeah,
um,
yeah,
and kind of getting stuck in that day to day with the single family and the flips, and um, if I would have slowed down a little bit, kind of planned that out more, um, you know, could have
yeah.
been in a different place right now, but getting it done.
Yeah, yeah. I mean, at the end of the day, you're where you're at right now. You're successful. You're building. You're growing. But I can get with you there. It would have
Yeah,
been nice to maybe start a little bit earlier
yeah,
um, on the multifamily. I did the same thing. I don't know if it was the same reasoning, and maybe it's not the same reasoning, but I just feel like I just got kind of complacent. Right? It was easy. Like I was good at doing flips. I was good at you know that buying these small 1 to 4 family rental properties for really cheap and be able to fix them up and then be able to get all in with no money down at the end of the day. And so I was good at that. Like it was easy. And
yeah.
why not just continue that? Where multifamily, like I would have to learn something totally new, and it was something I wanted to do, but at the same time, it was just easy to continue what I was doing.
No, that makes sense, man. I mean, you grow in the uncomfortable, right? I
Yeah,
mean,
yeah,
all I've done for the past 3 years is be uncomfortable every day almost. I mean, this for
but at
me
least
is
now,
uncomfortable
yeah, but
alone.
it's
I am not a very natural, outgoing person, but I've put myself in those positions, and it has made me grow for sure.
I think that that brings up something interesting because a lot of people probably feel the same as you. All right, would you call yourself more of an introvert?
Oh yeah,
Yeah.
yeah,
So as an introvert, somebody who's not like out there splashy, trying to be on every single podcast, or even if you are on podcast, it's like not your element. Um, but you raise money, right? And you get investors into your deal. So how are you getting investors in your deal being an introvert, not wanting to get yourself out there? Like what do you do? What would you say to those people who are the same way as you? Like what are some tips?
I mean, if you want it, you got to do it. I mean, you just got to put yourself out there. I
Yeah.
mean, uh, the second I decided that this is what I was going to do, I put myself out there on social media. I started doing Facebook Live. I started doing videos. I started networking, talking to everybody.
You've got to
It
meet
took,
up too, right?
I started a meetup. And, some people don't realize this, but it does take a lot more energy than it might for somebody that's an extrovert.
Yeah.
Um, it's draining. Like when I go to these events and I'm networking for 3 days straight, I mean, I'm exhausted by the end of those 3 days. But yeah,
But
I
you
would
have
say
to do it.
just get out there and do it.
Yeah. Yeah. Couldn't agree more. I mean, I don't know. I would say I'm maybe somewhere in the middle. I'm really outgoing after I meet somebody, but I'm not the person that's just going to go up to you just randomly and go shake your hand and who are you and introduce myself. But at the same time, if you come up to me, then we're good, type of
Yeah.
thing.
Yeah.
So, but yeah, you've got to put yourself out there. You've got to get yourself known to people, and then be able to talk about what you do. And then, of course, it helps being honest, ethical. Just
Oh,
and
absolutely.
then
Yeah. I mean,
and
you got
then
to follow
having
that up with,
and having results, right?
yeah.
So that's definitely good. So I've got a couple more questions kind of before we wrap up here, but
Mhm.
I want to know. We've already talked about some of the success tips, but I've got more specifically just three factors for your success. We've talked about teams and systems, but let's do three. Let's try to push for three more if we can. Three factors, three reasons for your success. Like, what have you done?
Number one is focused. Like I said, I stopped doing the single family flips. I put all my focus towards multifamily. And once I did that, then things really started coming uh, into place and happening.
Yeah.
Um, Second is probably probably what we just talked about, which is living the uncomfortable.
Yeah.
Um,
Yeah.
I put myself out there. I got uncomfortable, and that also helped to make things happen. And then the third factor is, and this may just be more for me as far as um, when I first started doing this, I was looking just here I live in Dallas. I was looking here in Dallas, and I underwrote deal after deal after deal and just couldn't get the numbers to pencil. And then not till I finally said, you know what, let me kind of start looking on the outside and not just in my backyard. And that's when things really started to pencil as far as the numbers. And then, we started picking up deals outside of Dallas, even though we did end up doing one here in Dallas, and we'll probably do more. It's just, the pricing is a little tough.
Yep. Yep.
And not even that. I think sometimes too, if you're in an area, sometimes you'll disregard a deal just because you know that area and you maybe knew what it used to be,
Mhm.
and you won't just look at the numbers.
Yep. Yep.
When I'm looking at a city that I really don't know that well, I'm just looking at the numbers, and
Yep.
that's what I'm paying attention to. And
Yeah, I think that's so true. And a lot of people are like, "Oh, you got to invest in your own backyard because that's what you know the best." Well, but you do,
yes
but
and no.
you also remember the past too, and you don't focus on the what's happening. Like, if I were to ask, I bet 100 people where their market is emerging, like what are the trends of how things are going and why, and like what is happening, I bet a lot of people in that city, that area, couldn't tell you. Like, they
Hmm.
wouldn't know. And I can remember back when my wife and I, we bought our first house to live in, and we bought it in St. Paul, in the city, in an area that, probably 15 years prior was a really bad area. Was a very bad. I mean, yeah, I can remember stories of people telling me that that grew up in the area, that they would take the bus to school, and there's people laying on the sidewalks with newspapers on them in the morning. That was, there are homeless people
Wow.
everywhere. I mean, so, and when we were looking to buy a house in that area, and she was telling other people where we're buying this house, these people that are 50, 60 years old are saying, "Ooh, don't buy there, it's a terrible area." And but they grew up, they know it. And so, do they know their backyard? Sure, but they also know what used to be a lot
Hmm.
of times, and they're not paying attention. So yeah, sometimes we know our backyard, but
Right.
a lot of I would be questioning people that are going in there investing in their own backyard. Do you really know it? Like, have you studied it? What's the unemployment rates? All that kind of stuff. Are you paying as, because I'm sure you, my guess, and correct me if I'm wrong, but when you were investing outside of your own backyard, you're studying that market
Correct.
very thoroughly.
Yes. Yes. All the numbers. No. Yeah. Better than I know here,
And
unfortunately.
and, and let me follow up with a question. You were doing your single families, your fix and flips, all that kind of stuff in Dallas. Is that
I
right?
was. Yeah.
Did you study the market prior to investing in Dallas? I mean, study, like thoroughly study it and know the employment trends and all that kind of stuff.
No.
No. And I'm the same way. Like, no, I didn't. Like, I knew it was like, I knew some stuff, but
Right.
I didn't pay attention.
Yeah, not like I know now.
Not like you know now. Yeah. Yeah. So good stuff. Good stuff. I think that's really important for those listeners who are going, I want to invest in my own backyard. It's fine. Like, I have nothing against that, but study it like it's not your own backyard. Study it like you have no clue what's going on in that market. And that way you really get to know it from an investor's standpoint, not just from a person who's lived there standpoint.
Yeah, I agree.
All right. So we're going to wrap up here. I got two more questions I want to ask you. Actually, I got three. I got one that just popped up in my head. I want to know for my listeners out there. I want to know, like, when you did that transition from single family to multifamily, how'd you get taken serious? Like, what did you do? What are some tips that you can give our investors, our listeners out there to get taken serious? By
Yeah.
brokers,
So
specifically, I guess.
yeah, the angle I took, I'm not sure if that's the right way of saying it, but where I figured I brought the most value was on the construction side.
Mm.
So I quickly noticed that a lot of the investors that were doing these multifamily syndications didn't have a lot of experience with the renovations and the construction side. So, I went in with that experience, and then found a GP that had the track record part of it and could use my construction experience, and that's how I got started. Um, I suggest others can do the same.
Yeah, I would think.
Find where you add that value, and then since you have no track record, if you're just starting, find somebody that does have the track record and bring that value to them.
Yeah, so powerful right there. I mean, you couldn't go from buying I should say you couldn't, but going from buying single families to buying a 200 unit apartment complex is pretty unrealistic for most people. So going from doing what you're doing to adding that value in the construction portion, and then getting into a 100, 200, whatever you got into, was a perfect way in. And you were an expert in what you had already established. So
Correct.
that's awesome. That's really good. Cool. What's a book that you can recommend to our listeners?
Oh man, so many good ones. Let me think. I mean, there's Cash Flow Quadrant was a big one for me that kind of opened my eyes on different types of incomes and where I wanted to be.
Yep.
And yeah, I'll stick with that one.
Awesome.
I can go on and on.
I'm sure. Well, you got your library full of books. Last question, and this you can answer kind of whatever comes to your mind, right? A lot of people answer it in different ways, so just whatever comes to your mind, answer it. And I didn't prep you for it. So, what are your 3 pillars of wealth creation?
Your 3 pillars of wealth creation.
Mm-hmm.
That's a good one, man. So I guess you can interpret that in different ways.
Exactly. That's the beauty of
that's
it. That's why I said answer whatever comes to your head.
All right. I mean, the first thing that comes to mind is creating passive income.
Yeah.
I think that's huge, and true passive income. Being a GP on a multifamily deal is not passive income.
Mm-hmm.
So that's why I still do passive investments in multifamily. And I will continue to find other streams of income that are passive.
Yeah.
And so 3 pillars. So I guess that would be one. 3 pillars of wealth. I would like to say maybe the second one to be, how I define wealth is really where I can, to the point where I can spend time with my family, time with my loved ones, and not worry about finances at all.
Love it. Love it.
Truly
Yep.
be there, present, and be able to provide whatever we want to do. If we want to go on this vacation, go to Europe for 2 months, which nobody's going to do right now, but yeah,
Yeah.
I can do that and
Love
not
it.
worry about it. To me, that's wealth,
Yes.
which I guess goes back to the first pillar, having that passive income as well. But and then the third is I definitely want to leave wealth for my family. When I'm gone, I want to leave that
Legacy.
legacy for sure. Um, yeah,
Awesome. I love them. I love them. Passive income, spending time with family and loved ones, and leaving that legacy. Those are awesome. Good stuff. Good stuff. Well, George, I really appreciate you taking time out of your day to spend with us. How can our listeners get in touch with you, learn more about what you got going on, have a conversation with you?
sure. They can check out my website, Elevate CIG. So it's Elevate Commercial Investment Group, but the website's elevatecig.com. You can see a lot about me and my team on there, and we've got a free ebook that they can download all about investing in multifamily.
Cool.
And then if they want to shoot me an email at George, which is JORGE at elevatecig.com. I've also got some couple different checklists I can send them, due diligence checklist, questions to ask a sponsor before investing passively.
Cool. Cool. Good stuff. Good stuff. Well, George, again, appreciate you joining us. You have a fantastic rest of the day, and take care, my friend.
Yeah, thank you for having me.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.